In this lesson, we're going to find automobile insurance premiums using rate tables, as well as determine how insurance is paid out. A major expense for individuals and businesses is the auto insurance. Why? Because there's a high risk of injury and death, and there's also a lot of damage to property that can occur. You can cover risks such as liability. That's when you're at fault for personal injury and property damage. You can have damage to or loss of the insured vehicle and its occupants due to collision, theft, fire, flood, storms. First off is liability insurance. That's protection for the owner of a vehicle if an accident causes personal injury or property damage to others, and it's the fault of the driver of the insured vehicle. So liability you get just in case you cause an accident. Comprehensive insurance is protection for you, the owner of the vehicle, if something that's a non-accident, such as fire, water, theft, vandalism, other risks occur, like deer, things like that. Uninsured or underinsured motorist in coverage is protection for the owner of a vehicle when damages are incurred and it's not the owner's fault. The other driver doesn't have insurance or has insufficient insurance. Medical expenses provides for payment of 100% of the medical bills up to the coverage limit arising from a collision, covering the driver and each passenger in the insured's vehicle. So you get medical expenses coverage for people in your car. Territory is the primary location where the vehicle is driven. And then liability limits are what happens for a single accident. Example 50-150 means a maximum of $50,000 per person bodily injury, $100,000 overall, and then $50,000 for maximum property damage. Now I looked at the Wisconsin rates, and right now the minimum you have to have is $10,000 for property, $25,000 for one person, and $50,000 for more than one person. Bodily injury, as I said, is when injury that's sustained in an accident or crash, and then damage, property damage is damage to the property of others in a crash, such as a vehicle or in case you hit something. The factors that affect the cost of auto insurance are, there's a lot of them. The location of the vehicle. Usually, cities are more expensive than towns or rural areas. The total distance traveled per year. Usually, the more you travel, the greater the cost of the insurance will be. Distance traveled to work each day, it works the same way. And then whether you use it for personal will be cheaper. Commuting is a little bit more expensive, and then business would be the most expensive. Academic record, the better your grades. If you're a student, the cheaper it is. And then the driving record and training. So if you have fewer accidents, fewer crashes, or fewer tickets, you have better rates. And if you took driver's education, you have lower rates. Age, the older you are, the cheaper it is. Sex, females usually pay less than males, and married pay less than single. The type and age of the vehicle, usually a better built vehicle will be cheaper, and a newer vehicle will be more expensive. The amount of coverage desired, for instance, if you have that 50, 150, whichever one you want of those, the higher the coverage, the more expensive it would be. And then the credit rating of the policyholder, the higher your credit rating, the cheaper your insurance will be. So if you look here, this is the insurance premium rate, an example for different coverages, 50, and then up to 500, 1,500,000. If you have good credit rating, occasional payments late, or bad credit rating, and then if you're in Territory 1 or in Territory 2, and if you notice Territory 2 is a little bit cheaper, so it's probably more rural. Another example of a chart also includes the kind of car that you have. If you notice, the more expensive one is the top one, the model class, and probably the faster it goes too. And then its age, as it gets older, it gets a little cheaper to insure. They show the Territory 1 comprehensive coverage and collision coverage. Notice there's different amounts of deductible, and the bigger the deductible, the cheaper the coverage will be. Okay, the book value is the value of a particular year, make, and model of a vehicle. If the damages resulting from a vehicle exceed the book value, the insurance company will only pay the book value, and the automobile is said to be totaled. So the first thing you want to, if you're looking for insurance premiums using the rate tables, you locate the amount that you have for each one of the different areas, and then find them according to the category. So let's look here at these examples. We're going to find the premium for, Okay. We're going to find the premium, annual premium for an automobile liability insurance policy, Territory 1, good credit, $50,000 to $100,000. So let's see here what we can get. Okay. The first off is liability. So we want 50, 110. Well, find the annual premium for liability insurance in Territory 1, 50, 150, I think it means, and has a good credit rating. So that would be 50, 110, good credit rating is $385. And then we have to go to comprehensive, and so it's a 3-year-old Class 2, $250 comprehensive, and it's good credit rating, so that's 301. And then collision is the next table over. $500 collision, 3-year-old Class 2, $500 deductible, good credit rating is 417. So we add that up and we get, well, let's just add it up. 385 plus 301 plus 417 is 1103. Okay, next. Margot Mahler has a $50 insurance. She has a $500 deductible collision, $250 deductible comprehensive. She crashed into a vehicle, so she was at fault. 3 persons, Leslie, Jim, and Ursula, were injured. Leslie's medical care was $21,000. Jim's was $68,000. Ursula had no injuries, and their car required $3,895 to repair. Okay, so they were all in the other vehicle. Since she was at fault, there's 2 possibilities of who's going to pay. The 2 possibilities are Margot and insurance. Her insurance. Now, let's talk about injury. And let's talk about vehicle 1 and vehicle 2. Okay, she has a $500 deductible collision, $250 deductible comprehensive. She crashed into a vehicle. Leslie, Jim, and Ursula were injured. Leslie, Jim, Ursula. Leslie, Jim, Ursula. Leslie's medical care was $21,000, so her insurance company would pay all of that because it's less than $50,000. Jim's was $68,000, so her insurance company would pay $50,000, but she would have to pay the rest, $18,754. Ursula had no injuries. I thought it says that 3 people were injured. They must mean, so nobody had to pay any for hers. Apparently Margot wasn't injured either. Okay, Margot's vehicle and other vehicle. Ursula and their car required $3,895 to repair. Since she had $50,000 of coverage, $3,895 would be paid by her insurance company. Hers was $5,093. She has a $500 deductible, so she has to pay $500, and the insurance company will pay $4,593. Okay, and then you can just add those up, and you can see how much each one pays. How much will the insurance company need to pay, and to whom? Well, what do you mean, to whom? Well, I suppose they'd have to pay this to the hospital, these two to the hospital. This money would go to Margot. This money would go to whoever would own the vehicle, the other vehicle. She would have to pay this to the hospital. She'd have to pay this to her insurance company. So that's how you would answer those questions. If you have any other questions, give me a call. Otherwise, I'll see you next time. Bye now.